accounting in case of frequent transactions. If we have goods sold on approval frequently, maybe around 5 times a month or so, we need to exercise better control, and therefore we have a separate set of books to record these transactions. First and foremost, we maintain a sale or return daybook, sale or return journal, or it may be called a goods on approval daybook or a goods on approval journal. This is where we first record any goods which are sold on approval. When goods are returned, also we record in this. When goods are approved too, we record in this column. The format and the details we shall discuss in a while. But this is the book where the first record of goods sold on approval, goods returned, goods approved are first made. Next, we have a sale or return ledger. This was a journal, and we have now a ledger which has two kinds of accounts. One account is the total sale or return account. The other is individual customers account. If we have 100 customers to whom we sell goods on approval basis, we will have 100 customer accounts in this particular ledger. So the entries are made in the ledger based on the records that we have made in the journal. We will discuss these details, the accounting entries, in a while. The point to note is that the sales return journal and the sale or return ledger, these are both what is called memorandum books. They are not a part of the principal books. They are not a part of the main books. They are memorandum books. Memorandum has been derived from a Latin word memorare, meaning to bring to mind, to remind. So these books are maintained to remind us of the goods which are lying with the customer, which have been sent to the customer, but which have not yet been recorded as sales. When the goods are actually approved, that is when the actual sales transaction has taken place, and it is only then that entries are made in the proper accounting books. Entries are made in the general ledger and the debtors ledger on actual sale, debiting the individual debtor, the customer, and crediting sales. This is the only proper book of account. The sale return ledger and the sale or return journal are both memorandum books. I repeat, the memorandum books are not a part of the financial books. They are not a part of the main books. They are not a part of the principal books. They are not a part of the subsidiary books. They are not a part of accounts. They are not a part of cost accounts. They are not a part of management accounts. They are not a part of financial accounts. They are memorandum books maintained only to remind us of the goods which are lying with the customer, goods which have been sent to the customer on an approval basis for which there is actually no sale as yet. The format of the sale or return book is as below. We have 4 broad columns. The first one being goods sent on approval basis. Goods sent on approval. This is the first column with 4 sub-columns: date, particulars, folio, and amount. Whenever goods are sent on approval, they are first recorded in this column. When goods are returned, they are recorded in the second column, again which has 4 sub-columns: date, particulars, folio, and amount. When goods are approved, they are recorded in column 3. And the balance is nothing but goods sent on approval less those returned less those approved would give us the balance. which indicates it's the stock of goods lying with the customer but at the selling price. This stock actually belongs to us since ownership has not yet been transferred. However, the balance depicted here would always be at the selling price and not the cost price. We need to bring the stock into our books on the date of closing at the cost price or sales price, whichever is lower. If we take an example, if on 1st March we sell goods to ABC with an amount of 10,000. The folio here refers to the folio in the sale or return ledger, the individual debtors folio, and when we total, the total sale or returns account folio. Folio indicating page number. On 1/1, ABC Limited, goods were sent to ABC Limited for rupees 10,000. Let us assume that on 10/1, ABC Limited returns 1,000, 10% or 1,000 of these goods and approves the balance 9,000. Let us take another customer on 2nd Jan. Maybe there is another customer, XYZ Limited, to whom we send goods on approval for 20,000. This customer may be on 10th approved of 15,000 and sent no intimation regarding the remaining. Assuming there were no other transactions and we need to close our books, there would be a balance here of 5,000. How are these records reflected in the ledger, reflected in total? This total 30,000 represents the total goods sent on approval. This total is actually credited to the total sale or return account. Credited. So we credit total sale or return account, and individually A's account, ABC's account and XYZ's account is debited. So we debit the customer's account, debit ABC's account for 10,000, debit XYZ Limited's account for 20,000, and the total sale or return account is credited for 30,000. As for the goods returned, this is the total. This total of goods returned again goes to the total sale or return account, but now this is debited. We debit the total sale or return account and ABC's account is credited for the amount of 1,000. With the total of goods approved, this total again is taken to the total sale or return account, which is debited again, and individually ABC and XYZ's accounts are credited. Therefore, only when goods are sent on approval, the customer's accounts are debited. If they are returned, the customer account is credited. If they are approved also, the customer account is credited. So that the balance in the total of the customer's account would represent the goods lying with the customer at selling price. Similarly, the balance in the total sale or return account would indicate the total stock lying with the customers but at the selling price. This balance of 5,000, if we need to close the books, this would appear as stock. This would indicate stock with customer to trading account. But it should not be shown at 5,000. It would be shown at 5,000 less profit minus profit. Now, once goods are approved, if this happens, there is one additional entry, but that is in the main books in the general ledger, where we would debit the debtor and credit sale account. Credit sale, debit debtor account with the value of 24,000. Debtors would be debited individually, ABC Limited for 9,000, XYZ Limited for 15,000, and the sale account would be credited for 24,000. We can just, the ledger accounts formats are like ordinary ledger accounts. In the sale or return ledger, again I repeat, these are again memorandum books, individual debtors accounts. Therefore, we would have XYZ's account, ABC account separately. The individual debtors account would be debited whenever goods are sent on approval. So, if this was ABC's account, we would say to sale or return an amount of 10,000. There would also be another XYZ account, in which case we would say to sale or return 20,000. As far as the total sale or return account is concerned, in total we would have had by sundries indicating several entries, a total of several transactions, by sundries, goods sent on approval. Goods sent on approval. This was a total of 30,000. For the 1,000 goods which are returned, we would debit the total sale or return account and credit the particular customer's account. We would say to sundries returned, goods returned would be 1,000. This would go to the by sale or return amount of 1,000. If goods are approved too, the same posting is done. If goods are approved too, individual debtors accounts would be credited and the total sale or return account would be debited. The total here would be by sale or return again 24,000 with the goods which were approved. Goods approved 24,000. The balance here 5,000 represents stock with customer at selling price. The moment goods are approved, it is an actual sale transaction and needs to be recorded in the main books, the general ledger and the debtors ledger. Debtors ledger, we would have ABC's account, we would have XYZ's account. These accounts would be debited with the value of the goods approved and the sales account in the general ledger would be credited. This is the main book. However, the sale or return journal, the sale or return daybook are memorandum books. They are not a part of the main books. Entry is recorded in the main book only when goods are approved and sale is actually effected. In short, to quickly understand what is the effect of all the accounting entries, when goods are sent, customer's account is debited to total sale or return account. This is in the memorandum books. When goods are returned, we reverse the entry, total sale or return account debit to customer account. When goods are approved to, we do the same thing, total sale or return account to customer account. If there is no intimation, there is no effect, but it is reflected in the balance column. Reflected in balance column of Daybook. No accounting entry is passed. Therefore, when goods are sent, customer account debit to total sale or return. If the goods are returned, total sale or return to customer. If goods are approved, also total sale or return account to customer. If there is no intimation, we do not pass any entry in the memorandum books. The balance in the total sale or return account reflects the balance of goods lying with the customers at the selling price. What would be the effect in the main books, in the general ledger and the debtors ledger? When the goods are sent on approval, we do not pass any entry in the main books. There is no sale, no entry is passed in the main books. When goods are returned also, there is no entry. However, when goods are approved, after they are recorded in the sale or return ledger, the goods which are approved needs to be recorded as a sale transaction in the main books. The entry being debtors account debit to sales, like in case of any ordinary sale. If goods are lying with the customer at the year end, we need to bring that stock lying with the customer into our books. The entry for that would be stock with customer on sale or return debit to trading account. However, this should be with cost or selling price, whichever is lower.